On today's episode, I want to take a quick look at 4 stocks I'm planning on buying this week. Like always, I put money to work on a weekly basis trying to get my portfolio to grow. I've done plenty of videos showing my investment styles and it has been working. So right now I'm going to take a quick look at these 4 stocks that I'm looking. I'm going to explain why I like them at these levels. So let's get started. If this is your first time here, my name is Jose Najarro. I am a stock market investor, pretty much long term, right? Right now I'm sitting with a little bit over a 6-figure portfolio. So the first company I am looking at for this week is Walt Disney. This is already in my portfolio at the moment, and I wouldn't mind increasing my overall exposure. If we take a look right now, Disney, most of the stocks we're going to look at today, in the past closing on Friday, they were super strong, so they will be super green. But overall, we can see Disney from its 52-week high, the stock is down about 10.78%. So what's got me excited about Disney? So right now, I do want to say it's really strong, the strength of Disney Plus. I'm taking a quick look here at the overall apps on Google Play for August 28th of 2021, and we can see in the United States the highest grossing number 6 was Disney Plus. If we take a quick look at Brazil, number 5 for the same time was Disney Plus. If we take a quick look at, I believe this is Canada, number 1 was Disney Plus. And if we take a quick look at Mexico, number 3 was Disney Plus. So in a lot of these big countries, Disney Plus continues to be one of the highest grossing games around. And this is what I saw on their most recent, when I was looking at their most recent earnings. They mentioned they had strong growth in numbers there. And I was already seeing that because of those charts right there. So we can see Disney in the most recent earnings, they reported about $17 billion in revenue. A good portion of that, about 66%, comes from Disney media and distribution. Obviously, parks have seen a huge increase, but they're still a small portion compared to where they were before because parks haven't really completely opened up. But there is a huge growth of Disney media entertainment distributions, growth over 18% compared to the same time last year. If we take a look at that total revenue, about out of that 12.6 that comes from media and entertainment, about 4.2 billion, we can see it right here, comes from direct to consumer. These direct to consumers are their Disney Plus, and it's also their Hulu platform and stuff like that. And that's up 57% quarter compared to the same time last year. And if we take a look at the past 9 months, that's actually up 62% compared to the 9 months of 2020. So overall, strong growth here in the direct to consumer. I do believe that as things continue, this is going to become, I want to say, one of the biggest portions of this segment, of this media and entertainment segment in the upcoming year or two. I wouldn't be surprised, especially with this type of growth that's coming out. So that's the main reason I'm looking at Disney, that Disney Plus, the amount of quality they're coming out with there and quantity, both quality and quantity in their products. I'm enjoying it, right? And I continue to see it as the one of the top 10 grossing applications worldwide. So the second company we're going to take a quick look at is Tesla. But before we take a quick look at that, guys, let's listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Tesla, this is another one in my portfolio, very, very small position right now that I wouldn't mind adding on to. So if we take a look from the past 52-week high, right, Tesla has definitely seen better days, is down about 19.38%. And we're going to take a quick look at charts for Tesla and for all these companies at the end of this episode. But we can see right now Tesla, for I want to say for the past 6 months or so, hasn't really moved. It's kind of been staying in this low 700, mid 600 range. So that has me a little bit excited too. The main reason I'm looking into Tesla is Tesla right now, I don't see it, and just like many other investors, don't see it as an EV company. And this most recent AI day just continues to confirm that, right? So the first thing, right, Tesla bot, not that, it's pretty interesting, not for it being a bot, lot, but from Tesla being able to use its vision data to kind of create other products, it again shows that, hey, Tesla is able to is something more than the EV company. The second thing I actually wanted to I enjoyed was their chip that they released, their D1 chip, which is going to be used to power their supercomputer, and this is Dojo, right? So let's first talk about this chip. I know a lot of people are talking about this chip and saying, hey, it's the highest performance supercomputer right now. But remember, this has yet to be produced, and this still has some time to be produced and actually go on live. So just take that with the grain of salt when thinking about Tesla. I don't believe they're going to become the biggest semiconductor company anytime soon. I don't think any of the high rivals in the semiconductor industry have anything to worry about when it comes to this chip right now. But I do want to say it just continues to show that, hey, Tesla is a company outside of EV company, outside of just being an automobile company. So those two products just show, hey, the growth of their vision data and the growth of them kind of expanding into more artificial intelligence type products. The third company I want to take a quick look at, and this is a recent addition to my portfolio. In my Discord channel, I post every time I buy real time and sell real time, almost real time. I post it like a minute after. But this is a brand new position in my portfolio, and this is Paysafe. I want to add on to this one as well. So Paysafe is pretty much, I want to consider it, as many people consider it, as a meme stock. It definitely has traveled like one. We can see from its 52-week high right now, the stock price is down about 55.98%. I do believe because it was a prior SPAC, it's kind of getting a lot of this negativity news on it. Also, Paysafe is not one of those growth stories that looks like a typical growth story, right? It's one that I'm looking a little bit ahead into. So Paysafe right now, super small market cap of $6.13 billion. So if we take a quick look at Paysafe, in their most recent earnings, they had about $384 million in revenue. A small growth, about 13% compared to the same time last year, but they did kind of divest from a previous portion of business that if that they didn't divest from it, their overall future growth would have been a little bit higher than that. Their main revenue segments are eCash segment makes up 103 million, so that's a good portion. The other one is digital wallet, which makes up 97.3, and the biggest is their integrated and processing segment, which makes up 191 million dollars of total revenue. This revenue, this integrated processing segment, comes a lot from the overall iGaming, specialized e-commerce, and ISV. And the iGaming world is continue to grow, and Paysafe is a big player. In digital wallets, one of the big portions of revenue comes here, or the overall adjusted EBITDA margins improvements, is because of the overall crypto trading activity as well. So why am I super excited about Paysafe? So Paysafe, I do believe its e-business is super impressive, and they recently made two acquisitions. One is Pago Efectivo and the other one is Safety Pay, and these were in early August that they made these acquisitions, and this is continue to grow that e-cash solutions in Latin America, which I believe has huge market exposure still ready for Paysafe to grab. So great acquisition move. And the third company that they recently acquired or plan to acquire is Via Fintech. This was released on August 22nd of 2021, and this latest acquisition accelerates Paysafe's growth in Germany and other key markets where consumers continue to move away from the legacy banking system. So Via Tech was founded in 2011, and it integrates with digital banking apps to offer an innovative mobile ATM concept, which enables consumers to make deposits or withdraw cash from their digital bank accounts at a nearby retail using a form of barcode. So this is another way for them to also continue to grow their eCash solutions, in my opinion, and kind of continue to expand that international growth. So overall, Paysafe is making great moves. And then if we take a quick look at iGaming, we can see in recent news on August 6th of 2021, Florida online sports betting plan approved by the feds. And then we can see recently Arizona has approved 18 sports books have been approved for the launching of online betting, which will begin September 9th, just right before the NFL season. So showing overall the growth, these are two markets, the eCash solutions and the iGaming, that's continue to grow for Paysafe. And I believe this is a company that will continue to do great returns. The final company I want to take a quick look at is Spotify. This is another one in my portfolio. For 2020, this was considered a tier 1 stock in my portfolio. Now it's not, but it's still one I want to continue to grow. Spotify technology, right? This is New York Stock Exchange ticker SPOT. We can see from its 52-week high, the stock has definitely seen better days. It's down about 38.01%. Main reasons I am super excited about Spotify right now. First, I mean, pretty cool news. They did have a repurchase program of up to $1 billion recently announced on August 20th of 2021. So that's good news. It shows that, hey, the overall management believes their shares are a bit inexpensive compared to where they should be. So overall bullish there. But we can see this is a company that, even though total monthly active users only grew single digits quarter over quarter, premium subscribers only grew single digits quarter over quarter, and ad supported monthly active users only grew single digits quarter over quarter. If we take a look at year over year growth, this is still seeing double digit growth, which is still pretty impressive. And they're still seeing growth quarter over quarter. Total premium subscribers are about 165 million users. That is insane, in my opinion. And now the advertisement business is also making more than 10% of this company's total revenue, which is also pretty impressive. So I can continue to see the growth in the audio market. I do believe the audio market still has plenty of room to grow. They are becoming what I want to say, one of the top content creator platforms. I have, for example, my podcast is actually on Spotify, and that's where I see most of my users coming from. So I can see from just firsthand experience where the true listeners of podcasts are in, and I do believe that's going to continue to grow over time. So now let's take a quick look at overall charts. The first thing I want to say is none of these companies are overextended. I believe a good portion of the risk has been eliminated. Obviously, volatility can continue to grow, and that's the way the game plays, right? But Paysafe right now sitting at this low levels of $8, mid 88s, seems to be attracting a lot of volume, in my opinion. So sitting very good. This is when I first started my initial positions around these levels, and I'm happy I did. Tesla, like I mentioned previously, not overextended from short-term or medium-term moving average, sitting at very attractive levels. Disney, very similar to Tesla, sitting at very attractive levels next to its short-term and medium-term. Spotify, I do believe, is the only one sitting at very impressive, I want to say attractive levels, sitting closer to its long-term moving averages. So obviously stock prices can continue to go down, but I do believe right now is the great time for me to continue to dollar cost average. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.